Welcome to Bears in Exile. Today is September 6th, and it is time for the market overview, looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. Alright, we had a really cool day today, and it was fantastic. It was all over the place. And so what do we have? Well, here we are with the Dow. We ended with a hammer. And, we had this melt up today. And so some people are saying, oh, it's time to rally. Well, I think those people are getting ahead of themselves. Certainly it's possible. Yeah, this is a hammer. Yeah, maybe this could be a higher low. But I'm going to point out some things. And so we had the short-term moving averages that came up for a bar retest. The bar retest failed. Friday on the Dow, we broke the major price consensus level, and we tested the upper support line and sat right on top of it. Today we busted through it. We busted through the lower, getting outside of the wedge completely. And it was at that time that we had ISM non-man report come out. It was surprisingly positive. And this just backed off. Notice it is almost at the lower price consensus level where it gapped to this morning at its lowest. And this is completely explainable, which is you have this massive gap down, this massive move down, all at once. The world's coming to an end, and it exhausts all kinds of energy getting there, all kinds of pessimism, all kinds of fear, and it lands right at the feet of a buying level. So that, in combination with a good report, builds a little bit of intraday momentum, and up it goes. Boom. Not bad, and that was, in my opinion, totally explainable. Now, there's so many things to note here. A, we closed below this support that we had. That's not good. It could act as resistance if we don't gap above it. Notice the short-term moving averages are pointing down. All that they need is expansion, and this is in big trouble. The lower support now has been pierced, reducing its strength and showing that it can be broken. So those things are really bad. Notice the middle Bollinger Band is possibly going for a cross. It's not pointed up, but if the short-term moving averages go lower through them, then we're going to have a cross of the middle Bollinger Band line to the middle or the top of the short-term moving averages. Also not a good sign. Then look at our secondaries. CCI ticking down, both the stochastics ticking down, 14-day RSI moving average ticking up, neutral on the RSI side tick, down tick on the MACD histogram, down tick on the MACD. It should be noted right now that the last week or so we've been saying that the daily was strong and the intraday timeframes were poor. Now we have the complete reverse. The intraday time periods for the moment look good, and the daily looks poor. And an example of that is, I'm going to go to the 60-minute, which we normally use for divergence looking, but for the moment I'm just going to illustrate what I mean by the intraday time periods looking good, which is we have today had the big move down, short-term moving averages slanting down, then leveling out. Secondaries, CCI up, stochastics up, 14-day RSI moving average at a point where it could turn around, since it is way low, that it should turn around and start to march back up. RSI getting out of oversold area, actually right at it. Histogram ticking up, and MACD also starting to slant up, looking for a bullish cross. Notice the middle Bollinger Band going into the short-term moving averages, possibly looking for a cross, and not much of a bearish bar formed to deal with on the way back up. So 60-minute looks good. It has lots of potential for going up. Now going back to the daily, we've been saying this for a couple weeks. We're expecting the short-term moving averages to loop over, come down, join up with the 14-day RSI moving average, turn around, and march up with it for our true move up. And look at the short-term, the slow, I can't talk, the fast stochastic. The fast stochastic is getting really close to the 14-day RSI moving average. That does not mean that it necessarily has to turn around right here as it moves, as it hits the 14-day RSI moving average. Normally it should go below it and then turn around and meet it on the way back up. The slow stochastic has further to go, but in any case, these are getting closer. SPX, even better than the Dow today, actually. All the secondaries are the same, most important being the stochastics clicking down, the histogram clicking down, the MACD clicking down. We have a nicer hammer. It did bust through the upper support and the lower support today, which is, of course, bearish. We closed below the upper support, which had just bounced off of it on Friday, backed off of it. Short-term moving averages, of course, pointing down, looking for expansion, and we are below the major price consensus level. So the daily does not look good, but the intraday time frames do. So anyways, moving on. The VIX, nice big gap up, and melted away as the day progressed, closing below the major price consensus zone. And notice the middle Bollinger Band is above the short-term moving averages still. We were saying that a kiss of the bar and a bounce off would be a textbook guppy entry. Notice today we have all of the short-term moving averages that were going into a bearish type alignment are now reconverging into a flat line and looking for expansion. So that will be very key to this whole thing if that happens. CCI ticking up, both the stochastics ticking up. We said that we were looking for them to go up here to the 14-day RSI moving average, or beyond, turn around and then join it on the way down. They have room to move on the upside, lots of room, before that occurs. Uptick on the RSI, uptick on the MACD, uptick on the histogram. So this looks like it very well may bounce and will have a guppy entry. Now you can look at this and say, okay, we have a peak, lower peak, lower peak, lower peak, the sucker's going down now. An NDE comes along and changes the game, and it's possible. I mean, you could get stuck right here and have it sit on the bar and whittle away at the bar, but just looking at this for what it is, this does not look bad for an up move until the stochastics get in alignment with the 14-day RSI moving average. XOI. Okay, it's going to be essentially the same as the Dow and the SPX, so I won't rehash that. Everything is identical. TNA, very similar. Notice that it did get above and close above the major price consensus level. That is a nice sign for TNA. Notice that it also is not a hammer of any sort. It's just a solid green candle. That is nice. For once, TNA actually has more development than the Dow. Look at the distance between the fast stochastic and the 14-day RSI moving average, and the histogram actually has a slight uptick, but the I'm sorry, the MACD has a slight uptick. The histogram has a downtick, but and not terrible. Tune has been ugly, and notice that it did get almost to its floor today, so no wonder why there was some buying. But also notice the short-term moving averages are already having some expansion, although their angle of descent is not as great as the Dow and the SPX. So a smoother descent seems probable, but we're going to have to see. Also, this one in its intraday time frames is also nice looking, just like the Dow and the SPX. So just to sum up, this has less to overcome for an up move than the Dow and the SPX at the moment. Alright, now for the real fireworks. UUP. Oh my. Now that is crazy. Look at that gap. Ends in a spinning top. We don't like spinning tops. Look how far it is outside of the upper Bollinger Band. That is completely crazy. CCI just off the charts along with both of the stochastics. 14-day RSI moving average ticking up. RSI, of course, ticking up, getting to overbought area. MACD and the histogram ticking up. This is just so crazy. I mean, I'm trying to find a gap that's similar to that, maybe back here at this peak, but for a gap that large and to be that far outside of the upper Bollinger Band is just crazy. So if this were to tick back down, that would be nice for the markets and would explain how in the intraday time frames we could have a move up, but the daily is still ugly. So boy, it's just crazy. I'm actually surprised the market wasn't down more, having the dollar go up like it did today. And FXE, nice inverse of UUP. Notice that it stopped right at its 200-day moving average. Ooh. Okay, so if it breaks below this, we know there is some serious problems. And notice also that it is barely above this previous low. So if it does break below this, it's in some real trouble. It is way below the lower Bollinger Band. It is a spinning top. Look at those short-term moving averages are just crazy. CCI way down, both stochastics way down, RSI 14-day moving average ticking down, RSI getting to 30, downtick on the histogram, downtick on the MACD. So you might look at this and say, okay, well, it has to have a move up because it is so out of position, so out of place. Well, look at that 14-day RSI moving average. It's right in the middle. It has plenty of room to continue moving down, and if it breaks this 200-day moving average, if it breaks this low that we have down here, closes below both of them, oof, this 14-day RSI moving average completely makes sense at that point, because all of these can still go lower or stay really low where they are now. So something to be aware of. Alright, moving right along, we have GLD, our second VIX, and spinning top. Notice the short-term moving averages pointing up, even though it was red. And with this expansion, the middle Bollinger Band line, which was right in the middle before, is actually slowly inching its way lower and below the short-term moving averages. CCI very high. Now here's the possible tell. We have the fast stochastic looping over to join the 14-day RSI moving average. We still have the slow stochastic marching up, but once these are all in alignment and they're all going down, that is bad news for gold. And now whether or not it's going to have a major impact remains to be seen. After all, if the dollar shows more strength and the euro tanks, we're going to have fear. Gold being priced in dollars, if the dollar is going up, then that would make sense with these starting to march down. And to what extent will that have on gold remains to be seen. Uptick on the histogram, uptick on the MACD, looking for a bullish cross, downtick on the RSI. Crazy. SLV did not perform as well as gold. We had a downtick. It was met intraday. It is a miniature hammer. CCI ticking down, fast stochastic ticking down, slow stochastic ticking up, 14-day RSI moving average ticking up, RSI ticking down, and downtick on the histogram and side tick on the MACD. So, well, certainly we do have some mixed signals, and it is entirely possible for the intraday time periods to produce some sort of a upwards move in the immediate future. The daily still looks ugly and has to be resolved with these indicators turning around. It is just really, really cool. And of course, once you expend all of that energy in the intraday time frame, they themselves will turn red as they turn into a bearish alignment. So the question becomes, does that energy expended in the intraday time frame, is it enough to change the daily into something that's positive? And if it does not, then you have everything in a bearish alignment. So next 2 days will be extremely critical, and but I am not counting out ultimately further down movement. And so there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.